in all seriousness, thank you very much for taking the time to join today. My name is Thomas Trepanier. I'm the head of capital markets here at Chainlink Labs. I'm thrilled to be here in front of you, and also sitting next to both Pere Guerra from Kakubi and Nick Zwanfeld from Chorest. Thank you, gentlemen, for joining today. Really excited about the conversation we're about to have, and and the insight that you'll be able to provide. If you wouldn't mind, if you could provide a little quick introduction to of yourselves, that would be great.
Absolutely. Thank you, Thomas, for the introductions and for having us speak here. So I'm Pere Guerra, a Catalan. Welcome to Barcelona, by the way. I'm the local. If anyone has food any desire to go and have great lunch on good restaurants, I'm your man. So anyhow, I happen to be CEO of a Swiss company. Kakubi is headquartered in Canton of Zug. And what we do is we are bridging the largest carbon market in the world into Ethereum. And the largest carbon market in the world happens to be the compliance carbon market of the European Union. Now, this water that has been served among attendees, well, industrials, in order to make this water within the EU, need to buy valuable permits to pollute, or else they get a fine from the European Union. So what we are doing is we are tokenizing these permits in the same way that Circle tokenizes the US dollar. We are bridging one-to-one permit to pollute with one KKB token. This is what we do. So we are bridging this valuable asset class that is actually deflationary.
Thank you, Pere. Nick.
Hi, my name is Nick Zwaneveld. I'm the founder and CEO of Chorest, based in the Netherlands. And in 2021, I decided to create a company that tokenizes real-world assets. Because I was active in the space, focused on tokenization in real-world assets in general. And in 2021, I had this idea to bring trees to the blockchain. We call them NFTs, and those NFTs are linked to real-world trees. And those trees, they generate CO2 tokens that can be seen as a carbon credit. And those CO2 tokens can be converted into proof of carbon compensation certificates. And we use Chainlink oracles to bring satellite data on chain to check if all the trees are there in order to mint CO2 tokens. So we basically created a whole new alternative for traditional carbon credits.
That's amazing. No, it's very interesting. Hopefully, I'm sure we'll get a lot of interest from the crowd here today, so thank you. So again, thanks very much for taking the time today. I guess we'll start with you, Nick. I guess based on what you just described, where do you foresee as being the biggest challenge for green and sustainability-linked finance and investments today?
Well, today there's, in my opinion, a lot of turmoil in the especially carbon credits market. There's been so much negative press around carbon credits in general. So I think people and companies, they lost a lot of trust in carbon credits. And I think that the biggest challenge right now is to restore trust. But people are also becoming a little bit politicized around the topic, especially around the term ESG. You basically see two camps now, maybe multiple camps, where I say, okay, ESG, we don't want to comply, it's hurting our business model. And you have another side that says, okay, we have to comply, we have to regulate the market. So there's basically no consensus where we should go at the moment. Right now I think we have to first come to consensus that there are alternatives out there that can restore trust.
Understood. Pere.
Well, it's building on what Nick has said. Unfortunately, the carbon space has had a bad press as of late. There's been the John Oliver video. The Guardian published that 94% of the credits do not deliver exactly what they say in the tin. This is why strategically we've positioned ourselves to a completely different market. The carbon credits were accepted within the European Union emissions trading system years ago, but they were banned due to quality control issues. There are people like Nick working in the space and doing something that I believe are valuable. But I think it's safe to say also that there are people in the space doing things that are not reputable, and I think it's a discredit for the whole industry, right? What we do is we work on the other side of the coin, which is the compliance side, and we don't have the problems that the carbon market traditionally has, the voluntary carbon market one. On compliance market, what we can deliver is really a solution to what is most challenging, as you asked, Thomas, which is what are the challenges right now on investing in this kind of tokens? Well, lack of standardization, lack of liquidity. Kakubi is precisely a two-way bridge to connect a market with the liquidity of 700 billion. I'm going to say that again. It's 700 billion. It's 700 times the size of the voluntary carbon market space. And we have no quality control issues because at the end, these factories are inspected on behalf of, the EU takes good care of inspecting the polluters, people who make bottles of water, for instance, so that the market is properly audited. Yeah. And we don't have quality control issues. And I believe this could be a solution to what this space needs.
Awesome, fantastic. Thank you for that. I guess that leads into the next one, where I'd love to if we can expand on a little bit further, starting with you, Nick. What do you think the potential of tokenization is in terms of bridging the gap? I mean, can you add anything beyond what the two of you have mentioned already?
Yeah, so the potential is that tokenization does not only allow you to restore the traceability, but with Chainlink functions, for example, you can directly make the connection between the real world asset and the token. So the relationship between the token and the real world asset becomes so interconnected that you can do way more new use cases besides just minting a token. So we can connect more real world data to a token, giving more insights to people that are interested to buy the token, creates more trust because of all the data. Because we're not only cutting out the middleman, we are also allowing almost near real time to get real world data onto chain and connect it to a token and other on-chain use cases. So that's what I would say.
Perfect, thank you. I guess, Pedro, what are your thoughts on tokenization? Do you think that does it remain flexible and strong, or at least strongly aligned, I should say, with the monitoring and reporting and verification, the MRV?
I think we've moved past MRV, monitoring, reporting, and verification. At the very least, in my experience, I'm also happen to be board member of PMEC, which is one of the biggest business associations in Southern Europe, and it's a local business association. And what we have seen is that most industrials and most SMEs have already done their accounting, their carbon accounting. They have finished that, or they are about to this year, mainly because of market pressure or because their providers who happen to be big companies or governments require them to account their emissions. Now the challenge is to reconcile the fact of, well, I've accounted my emission as an industrial or as a business, and then how do I offset this, or how do I reduce my emissions, which is a huge challenge because people are still realizing how hard the climate transition is going to be. The energy transition is going to be a colossal challenge in terms of, reducing the carbon footprint is not a matter of, stop burning coal to produce electricity. Electricity is only 1/4 of the problem. What do we do with mobility? What do we do with the clothes with resin? What do we do with the buildings that are made of concrete that happen to pollute as well? So it's a huge challenge. And accounting is something that's done now, more or less in an accurate way. Offsetting this is going to be a massive challenge. This is the reason why we are trying to put this valuable asset class on chain, which is the remaining carbon budget of the EU, which we believe is going to be the goal of the 21st century.
Okay, fantastic. Thank you. I guess if you were to continue on that parallel, though, what beyond that, what potential applications do you see for the sustainability-linked debt and asset improvement side of the business?
Good question. I believe in terms of debt sustainability, the thing is our economic system is clearly inflationary. And we just print and print more dollars, more euro, and we extract resources from a finite world in the hopes to achieve infinite growth. This has to come to terms with reality, right? Richard Feynman said that reality must take more importance than public relations because nature cannot be fooled, and we live in a finite world, right? So I would say because the economic system is inflationary and because the carbon budget shrinks annually, or should shrink, or else we get annihilated as a species. So it's stupid not to account for this budget. I believe a good hedge to all this is to get a deflationary asset class, such as the UETS, the permits to pollute that we are tokenizing, because it's a good hedge against inflation as well. And it protects you against devaluation of the euro, it protects you against devaluation of the dollar, and it's something that is standardized and hugely liquid.
Okay, fantastic. I guess, so Nick, if I understand that carbon offsets are verified, tradable certification that evidences the reduction or removal of carbon emissions. With that, I guess, what do you think what's the current focus on net zero? What opportunities are you seeing?
I see the opportunity to connect mainly farmers from developing countries to this market through the tokenization of their green assets. And basically allow them to tap into capital markets, so we can open up the market to investors that want to invest in green assets all over the world, allowing those developing countries to open up and basically attract capital to invest in sustainable business like agricultural, forests, what we have seen in multiple areas around the world. Because in those developing countries, it's mainly a lack of banking infrastructure and capital that prevents those local farmers from growing their business. And I think with this new technology, we can basically make that scalable service on a global level. We've been trying to do that on a small scale. But I think you are able to fractionalize a farm that has a real return on investment. And if you can make that scalable, then you have something very interesting, because then you can come in and invest in different types of green assets all over the world. That generates jobs locally, and you're restoring the environment. And you have, in many cases, more food production. So, and then it becomes really sustainable, in my opinion, because I think we are too much focused on philanthropy, and I think it should be pure capitalism, in my opinion, and tokenization basically facilitates that process.
Okay. We have some extra time left, so I'm thinking, I personally would love to hear, is there anything that you have in your roadmap for the coming 18 months, each one of you, that you don't have to give the granular details, but something that would be of interest to those that are listening today?
That's a great question, Thomas. And I believe what is hampering investment in the space is lack of legal clarity. I was in New York last week attending Messari conference, and among the best innovators are US-based, and unfortunately they have the SEC there with lots of restrictions as of late. So what I believe everyone should be working on in the next few months is to get more legal clarity, which is precisely what we're doing at Kakubi. Right now we are approaching FINMA, the Swiss regulator, to get a letter of non-action so that there is complete legal clarity in what we are doing and in the asset class we are bridging. I myself am a serial entrepreneur. I did set up the fastest growing business in this country on year 2008. And it's now a publicly traded company with a market cap of more than 100 million. I'm in Kakubi because I believe even more in what Kakubi is doing. And, but unfortunately, I must have spent probably 300, 400,000 of my own money in lawyers. It's been 11 lawyers, wow. 3 different jurisdictions, until we found out what worked best and our unique approach to actually deliver legal clarity. Because I can even tell you whether or not, when buying this, you should be paying VAT. I could get you an invoice. So legal certainty, I believe it's something as a must. And of course, bridging one asset that is not regulated is relatively easy in terms of legal. It has other challenges that great people like Nick are trying to solve. But when you bridge an asset that is from the EU, and it's standardized, it's liquid, it's a market of 700 billion, so you bet there are legal challenges and legal certainty questions. So our job here is to get the maximum legal certainty to our investors.
Interesting, interesting. Nick, from your vantage point.
So we've been exploring all kinds of things. For example, to develop a framework to standardize the use of MRV data and bring that on chain in the most decentralized manner possible in order to create different types of use cases on chain. Because I think if we cannot come to a standardized way of utilizing different data sources, if we don't agree on, okay, where do we store that data, which decentralized data storage would be the best, what data formats or what file formats are we going to use, how are we going to use Chainlink functions to get all the data on chain. Because there's quite some tribalism, to be honest, in this space. I've been advocating for a registry that is completely neutral and not owned by anyone, because we created a registry for projects. You have the traditional registries, other companies are doing it, and I think that should not be owned by anyone. It should be a neutral registry with clear guidelines how you can get registered. That's one. We've been exploring other real-world assets that we could tokenize with the same technology, because okay, we have a good understanding. Okay, what can we do? So we started with satellite data, for example, but we know there's on-the-ground data and in-the-ground data sources that we could utilize, because people are interested also in biodiversity. So that is something we've find really interesting. And another use case that we've been quietly building together with Ethereum is an insurance product for the actual real-world assets, the trees. Because if we mint a token, an NFT that is tied to a real-world tree somewhere, they're exposed to real-world danger, so fire, flood, and storm. And in order to make this an asset class that can grow, we need to ensure that those assets are safe for investors. Right now, we, as a company, we own also 17 hectares of our own land, not too far from here. It's 2.5 hours away from Barcelona, where we have planted 2 different types of trees. One is a fruit-bearing tree, and one is just a regular forest as a proof of concept. And if something happens, for example, fire, we can replant it ourselves as a sort of guarantee to the buyers of the NFTs. But yeah, we also want to basically hard code that into our platform, that each farmer or green project that is onboarded automatically is insured. So because otherwise I think we will never be able to attract big capital to invest in projects, because yeah, would you invest in 10 hectares of mango trees in Angola? No, right now you would not do it. There's too much risk involved, but if we can overcome certain risk by introducing an insurance product, for example, I think it will become a more attractive investable asset because you're having a positive impact on the local economy and you have a real world return, right?
Sure. So something people can relate to. Exactly.
Yes, and especially if you can combine that with a clear prospectus. Show the investors, okay, those are the risks. Then I think we can go to the next phase. Instead of saying, okay, this is an NFT, all nice and well, has a nice picture, and so the degens buy it, but we want to move to the next phase and talk to, for example, pension funds, right? That might want to step into the space, but yeah, right now it's just too risky for them.
Have you had? That actually begs a good question. So here we are at SmartCon. There are some, traditional financial services firms that are here. Have you seen any of the firms come to you to ask questions or to investigate?
Yeah, definitely. I interacted with some of the bigger banks, but I think that they are dipping their toes in the water right now, and maybe they are just waiting a little bit to see how the space evolves. But they are definitely interested because they see, okay, the government is pushing a certain ESG policy, but at the same time they look at, okay, what can be offered to our clients? So they're definitely watching. And some of, like ANC, they created their own carbon reef credits, for example. Because I think banks are trying to first figure out how it would fit in into their business model and how they could offer it to their clients.
Right. Anything to add on that, Pero?
Well, I would say, in terms of, we've discussed and touched on many topics, right? And certainly delivering certainty to the investors via prospectus can be a good thing. I mean, we are doing that as well. Our customers have been slightly different to yours, Nick. We've had family offices all over the world buying. We've done $600,000 in sales and are spending almost zero on advertising. And really what we have found is that family offices are interested in the asset class we are delivering, mainly because we are bridging something that was only available for the big guys, right? Because this market, of course, if it's 700 billion in size, Goldman Sachs is going to trade it, Morgan Stanley is going to trade it. We have Lawson still on board as part of board member at Kakubi. And it was great working with Lawson because he got us eased agreements, and I felt like the guys from the Big Short movie, right? I mean, how come do I get to sit with the big boys table and get this asset class? Now, thanks to the work we've done on securing the supply chain, we've removed so many intermediaries. I'm confident I can deliver this asset class allowances from the compliant market of the EU to industrials in a cheaper way, in a more transparent way, and to investors and family offices as well. So traditionally, what investors would do is to buy futures of this asset class via an ETF, a Chinese-owned ETF, I believe. So it's quite popular. But of course, it's only available to very few investors, right? So it's not something available to the public. We are actually bridging this with a focus to reach retail and making retail people, popularizing the access to this market that was only available for the big guys. Now, it has applications for the industrials as well, our approach. In the same way that blockchain and transparency can help the voluntary carbon market space, we believe that it can also help and complement the compliance space and the industrials. Mainly because industrials go through 1, 2, 3 intermediaries before buying the allowances, the permits to pollute. And they need to surrender them annually before April 30, or else they get a fine from the EU. So it's fish for so many intermediaries, you know? What we're doing is actually expediting the access to this market and making it simpler, which imagine, for instance, a DeFi liquidity pool with this asset class. much better price discovery than what industrials have right now. So I believe this leads to a better world also for industrials.
Interesting. Amazing. So we have a few minutes left. Is there anything you think that you're looking forward to or that you want to leave in a parting comment beyond what you mentioned already between the two of you?
Well, what I would say is that there's been lots of talks about crypto and about how great change like Ethereum could be self-sustained and hold value. I really, honestly, as a businessman, as a serial entrepreneur, cannot understand a world where Ethereum is valuable without real-world assets in them, which makes place for Chainlink, which makes place for a company like us. Because, hoping that Ethereum will be self-sustained and hold value per se, as a network, I believe it's just wishful thinking, unless there is something tangible that interoperates within Ethereum. This is my parting thought.
No, thank you. Thank you.
I was participating in the hacker house, playing with the new tech of Chainlink, and that made me think about new possible use cases for real-world assets, not only for trees but I think now that smart contracts basically have almost unlimited access to data outside of the blockchain, you'll see a lot of growth. And that, of course, if you look at the green finance or DeFi world, that will, I think, create new possibilities. And I think that we have only started touching the surface, and we've been experimenting with other data sources, and I see some initiatives, and I think you will be surprised what kind of assets you will see, because I think one of the most exciting things is that you cannot really predict what this new technology will bring. Right. Because personally, I never thought I would create a product like this 3 years ago, right? So, it's becoming this unpredictable space if you put technology on top of other technologies. And I think you will see more and more real-world use cases very fast with the help of this Chainlink technology.
Fantastic. Well, I think we're at time. I want to thank you all very much for taking the time to join us today. Thank you both very much for participating on the panel with me as well. I learned a lot. It's very informative, and I look forward to continuing our dialogue together.
Thank you.
Thank you
very much.
Thank you very much.